are inconsistent, and that's why you could be down one day, and in this case, up right now. A lot of people just are shaking their head. I cannot see that we would go ahead with those tariffs, or if we do, that the Chinese wouldn't respond. So what to make of the possibility that the tariffs go into effect bright and early on Friday, and the Chinese do make good on a response of their own? Then what? I know it's very difficult to hazard a guess here, but let's do that. We got Delancey Strategies Chief Strategist Jared Leedy, Agora Financial Market Strategist Alan Nuckman. What if it came to that, Alan? We deliver on the tariffs we threatened, and the Chinese deliver back on tariffs they threatened to respond.
Well, from a trading standpoint, the news is factored in. That fear is already factored in. So we can get to the facts. The facts are, if it actually does happen, the impact on GDP is rather small. Now, let's look at China. Their growth rate is at 6%, which is double ours. But, we've been talking about this here now for a couple of days, and the market's fully aware of where we're at. So from my standpoint, I see asymmetrical risk here. I see that most of this is already baked into the cake, so to speak. And if something does come together, which probably has it's happened every time before, that would be very much a positive for the stock market. You could see a nice, healthy relief rally to the upside.
Let's say we get something like that, Jared. You always hope that cooler, calmer heads prevail, and that maybe given the potential for promise of the talks, we don't implement tariffs. But I guess if we do, at the very least, that's going to extend the chill, right?
Yeah, let's not forget. First of all, I partially believe with Nuckman. I think that some of this is baked in. What I don't think is baked in is if things continue to sort of fall apart. We knew there'd be stumbling blocks, and cool and calm heads, you really can't use those words when describing Trump, nor describing what China's done. And China's had their way with us for 20-something years. And the key here, the key to this whole thing is being able to enforce a trade deal. It's not a regular trade deal. China has gone back and reneged on deals and sort of done their own thing. They've continuously sort of backtracked, and now they're doing it again. And I think what Trump is doing is saying, listen, I'm done with the backtracking. He's drawing a line in the sand. I think it will work. I think for both nations to thrive, the two biggest economies in the world, it has to work. And I think in traders' minds, they're believing that as well. I don't think a deal's going to happen. I do think that we could get a pause if there's some agreement Friday, but I think we've got a long way to go based on what we saw from China's response on Friday.
Alan, you've reminded me, and it is a good reminder that, when we were most fatalistic about the talks evaporating, if you had bought then, I'm paraphrasing, you would have done okay because markets came back. Do you see that continuing?
Well, every time in history, the market sell-offs have bounced back and made new relative highs until it doesn't. Now, looking at some of the fundamentals, we talked about the fundamental facts here. You can see interest rates here, the 10-year notes down here at the lows. And looking at the board here, you can see they're talking about raising interest rates, short-term interest rates next June. So it's kind of a mixed bag, but it's not going to have any impact on stocks. Stocks are still the place to be for yield. That hasn't changed. These outside interests and these headlines, shake up the markets, but that more times than ever is opportunity, and you can see that here in the volatility. The VIX has doubled in the last month, so the fear is in. We know, the worst case scenario, and the market stands here. We're only a couple % off the all-time forever highs, and we're talking about a serious situation, even if it comes to fruition.
If it looks like it drags on, though, Jared, then what?
So we're roped into this minute-by-minute minutia, I'm calling it. Part of it is the fact that Trump has to maintain optics with the American people, with the Democrats. He's got to let everybody know that he is, you know what I mean? So we're caught up in all of this. The reality is this stuff should be going on behind the scenes. In the digital world, it's all out there. I think we're kind of growing accustomed to it. As Alan said, it's baked in. But again, if there's a really deep deterioration, which I don't think there will be, a very deep deterioration in talks and a complete standoff, that is not baked in, and that could trigger a 5% sell-off. And again, depending upon what happens, but let's slow down, pump the brakes, and I agree with Alan. Use the sell-offs as buying opportunities, because right now stocks still are, as Alan said, the place to be.
All right, guys, I want to thank you both very, very much, and it is very foolhardy to try to go tick by tick, movement by movement, minute by minute, how stocks are doing to make any stamp on how this is affecting. I can say that will help you with this, that since we first started negotiating with the Chinese to deal with their tariffs and threatened tariffs of our own and the back and forth, we are still up for all the major averages, anywhere from 5 to 9%. So that's a longer term picture from early 18, where we were 2018, to where we are right now. But if tariffs do go into effect, not only the ones the administration is considering, but how China could be responding, it could be